FTX founder Sam Bankman-Fried speaking out for the first time since put under house arrest. In a lengthy Substack post, SBF denies stealing funds from FTX, claiming he didn't stash billions away.
It's funny. SBF has been talking so much ever since of FTX's collapse. He makes a bunch of claims in this very lengthy post.
These types of statements can only be used against you. You can't use these types of self-serving statements at trial. That would be hearsay, of course. So if you're Bankman-Fried's lawyers, you're begging, you're pleading, you're telling him, keep your mouth shut, stay off social media. This is not going to help your case.
He says, I did not steal funds. I certainly did not stash billions away.
Sam Bankman-Fried is in a world of trouble for running a Ponzi scheme that swindled millions of dollars from investors, but he still refuses to admit any guilt. He's facing up to 115 years in prison if he's convicted of federal fraud and conspiracy charges. But yet, he has launched a public newsletter via Substack in which he categorically denies any wrongdoing. He has also refused to admit any guilt or responsibility for the losses incurred by investors. In today's video, Mark Moss explains the wrongdoings of SBF and how everything is more than just a coincidence. He also talks about the regulations in the crypto market, so stay tuned until the end of the video. For more videos on the SBF case, crypto market, and economy, subscribe to my channel. You can also hit that bell icon to never miss any video. Let's dive into the video now.
So I think there's a lot of coincidences, and ultimately when there's too many coincidences, there must be something there that, as they say, where there's smoke, there's fire sort of a thing. And so a lot of these could be coincidental and some could be serious, but again, collectively they add up to a lot. So if you look back from the beginning, this one's maybe more on the coincidental side, but FTX was founded within weeks of Biden announcing that he was running for office. That one's probably a little bit more on the coincidental side frame. And then, of course, FTX became Biden's second largest donor behind George Soros, which is no freedom lovers fan. And so they became the second largest donor. We know that he gave about $40 million to midterms to Democratic parties this year. And he had committed or pledged or hoped to give up to $1 billion in the next election. And so it became this
dangling that carrot. Yeah.
Dangling that carrot. And then we can go deeper, right? So it's like, who are his parents? So both of his parents are law professors, and not just law professors, but tax law professors. His father actually wrote legislation for Elizabeth Warren. Oh, coincidentally, who's the one passing this new Digital Asset Anti-Money Laundering Act? So his father did that, and his father wrote multiple papers on why we need to get rid of cash, right? So his father is in the government already writing legislation about banning cash. And his mother is also tax law as well. But then also his parents collectively are what's called bundlers, which means they're in Silicon Valley meeting with their buddies and collecting money, bundling money together to donate to super PACs. So they're very involved in politics, into the Democratic Party, and in influencing cash, business, and tax and policy and things like that, even writing legislation for Elizabeth Warren. So there's some stuff there. Then we saw that he became a partner with the World Economic Forum. Now, that's another coincidence, but these coincidences start adding up. Mm-hmm. We also see that his aunt also works for the World Economic Forum, and not just World Economic Forum, but also Johns Hopkins University, which was involved in the Pandemic 201, which was the test that happened right before the whole world went into lockdown, which is another coincidence. His brother also started a fund and a super PAC to raise money in conjunction with the World Economic Forum to prevent the next pandemic. So I think it was like $18 million was spent on pandemic stuff, and they were hoping to stop the next one. So you have this deep connection and family ties from his brother, his aunt, the World Economic Forum, Johns Hopkins University, the pandemic, his parents, the bundlers, and it goes on. So then, of course, Caroline, who was the CEO of Alameda, her father taught at MIT, and he was Gary Gensler's boss.
Yeah.
It just kind of keeps on going. Now, we see a lot of people coming out of MIT that end up in similar situations like this, like almost like MIT could be some sort of a recruiting center. And so we can keep going.
Mark Moss believes that all the things happening and people involved in the FTX case is more than just a coincidence. And an SBF recent posting on Substack claiming he didn't do anything and blaming others for the FTX collapse is no other thing. Despite the fact that he could face up to 115 years in prison if convicted, Bankman-Fried showed no remorse for his actions. In his post, he claims his crypto hedge fund, Alameda, quote, failed to sufficiently hedge against the risk of an extreme market crash, end quote. According to him, he wasn't in charge of Alameda after handing the CEO role to his former girlfriend Caroline Ellison in 2021. SBF also claims that Alameda Research was a victim of downturns in the market and eventually, quote, Alameda's contagion spread to FTX, end quote. SBF cites other recently failed crypto firms like Celsius and Voyager in an attempt to show that this was an industry-wide issue and not unique to FTX. Prosecutors believe that this blogging was a very bad idea to start from for SBF. Former federal prosecutor Renato Mariotti said that, quote, there's absolutely nothing to gain from what he's doing. It's incredibly foolish, end quote. Despite SBF's claims, prosecutors say Alameda used customer funds from FTX to make up for the hedge fund's losses in what they call, quote, one of the biggest financial frauds in American history, end quote. But SBF still vehemently denies wrongdoing, writing, quote, I didn't steal funds, and I certainly didn't stash billions away, end quote. Before jumping ahead, be sure to like and share.
Back to SBF. So, he built a $30 billion company in 3 years. Him alone, he didn't have any help doing this. And then this money, he was buying his way into Washington to create all this new legislation. So he was the one championing all this legislation. Okay, so then let's jump into he got arrested. Now, he was supposed to appear before Senate to give testimony.
Yeah.
And nobody was moving on this. I mean, calls all over the internet for why isn't he arrested? Why is he still a free man? They need to take him into custody right now. But yet he's on book tours and he's giving podcast talks and this and that. Well, he was scheduled to speak before a committee to give his testimony. And the day before he was supposed to do that, they grabbed him. Could that be another coincidence?
Right.
They don't want to hear what he's going to say. Could he be implicating some people? We know the Jeffrey Epsteins and the like of that world, they never get a chance to publicly talk. And so he disappeared right before that happened. And when I say disappeared, he waived his right to be sent up to the United States.
Extradition.
Extradition. Sorry, I'm drawing the blank on that. So he waived his right on that, which means that could have been about a 3-year, potentially it takes about a couple of years, up to 3 years to maybe get him extradited to the U.S. That's how stories die. That's how stories don't get told, right? I don't mean him dying, but over a couple of years, that thing just fades away. I would say the coincidences only keep piling up. It doesn't get more clear.
There are so many bizarre and illogical excuses buried in the transcript of SBF's prepared remarks that I can't list them all. But just like Madoff before him, it may be a long time before SBF's reality denial field finally collapses and he admits what really happened. Hit that bell icon to never miss any update on the FTX case and crypto market. Also, don't forget to give a big thumbs up to this video. Back to the video. As this crypto space continues to pick up the pieces from the calamity of FTX and Sam Bankman-Fried's recklessness, making at least some regulatory headway is undoubtedly not a bad idea. How that plays out exactly will determine the evolution of the industry. Let's get into the next clip to hear Mark Moss's viewpoint on the matter of regulation in the crypto industry.
Well, all of those coincidences are fun to talk about, and it's interesting. We can speculate. We don't know, so we can just look at the facts, right? And so the facts is that the public now demands action. The SEC looks horrible. They need to take action. So we talked about the one bill from Elizabeth Warren. There's another one. It's called the Digital Commodities Consumer Protection Act. And that's for the CFTC. And so the CFTC would get more oversight. They'd get more authority to go in and request, documentation and to vet these companies and things like that. And so we kind of have both regulatory bodies trying to pass these pieces. Plus, we also have some very aggressive rhetoric coming out of Gary Gensler. He said that he thinks that the top 5 cryptocurrency exchanges are security exchanges, and they should register as security exchanges. And so if we just saw in the United States, Coinbase, Kraken, Gemini register as security exchanges, then they have to delist tokens that aren't registered as securities. And so he's said that. So he said this very increased rhetoric. And like I said, I think the public demand is going to be that he acts. So I would imagine we're going to see increased enforcement on a bunch of cryptocurrency projects. Of course, we have the Ripple case that's maybe going to come to a head maybe in the next 6 months or so, next couple of months. That's going to be a big one. And then I think probably next year we're going to see action on some exchanges, because rather than trying to go after 20,000 projects, they can just go after 3 exchanges and just take care of the whole thing.
First, the crypto winter, and then the FTX exchange's sudden collapse. Both experiences made it abundantly clear that in order to avoid a turbulent 2023, fraught with widespread distrust in this emerging industry, steps will have to be taken. That will help distinguish between what is considered more of a casino and what is a real financial instrument. Mark Moss has highlighted that both bodies, the SEC and CFTC, are in the play to build a regulatory framework from the ground up. But the two bodies have increasingly sparred with one another over a central question. Are digital assets like cryptocurrencies commodities or securities? And what exactly should be the goal of crypto regulation? Let me know what you guys think in the comment section below. For more videos on the crypto market and economy, be sure to subscribe to my channel. You can also hit that bell icon to never miss any video. Also, don't forget to like and share. I'll see you guys in my next video. Adios, and thanks for watching.